Hi everyone, and welcome back to SALT Talks. My name is Rachel Pether, and I'm a Senior Advisor to Barclays Capital, based in Abu Dhabi, as well as being the MC for SALT, a thought leadership forum and networking platform that encompasses business, technology, and politics. Now, as many of you know, SALT Talk is a series of digital interviews with some of the world's foremost investors, creators, and thinkers. And what we're really trying to do here is provide our audience a window into the mind of subject matter experts. The subject for today's talk is going to be on sovereign wealth funds and venture capital investing, and who better to discuss these topics with than Winston Ma, who's a former managing director at the China Investment Corporation, one of China's sovereign wealth funds. He spent 10 years as the MD and head of North America for the CIC, and was a founding member of the CIC's private equity department and also the special investment department for direct investing. He is the author of China's Mobile Economy, The Digital Silk Road, China's AI Big Bang, and Investing in China. He also has 2 new books coming out this year, actually one later this week, which we'll go into more detail on later. In 2013, Winston was selected as a young global leader at the World Economic Forum. He has multiple degrees, and he has served as an adjunct professor at a number of world-class universities. As always, if you have any questions for Winston, just enter them in the Q&A section of your screen. And with that, Winston, welcome to SALT Talks.
Yeah, thanks for having me, Rachel.
No, it's such a pleasure to have you with us today, Winston. Now, you're an investor, you're an attorney, you're an author, and you're obviously also a professor in the global digital economy. So maybe we just start by you telling me a bit more about your personal background.
In 1997, I received a scholarship from NYU Law School, so I came to New York, which started my Wall Street career. First as a lawyer at the Davis Polk, and then after B school, I joined JP Morgan for equity capital markets, convertibles, and the derivatives. 2007, Barclays Capital started U.S. equity business, and they hired me to start that business. And also in the same year, CIC was set up to manage a portion of China's sovereign wealth, right? The $1 trillion foreign reserve. So starting from the beginning of 2008, I moved back to China to become a investment professional to manage a portion of the country's wealth. Between the 10 years at CIC, I also spent 4 years in Toronto, Canada, for CIC's North America office. Actually, for the first time, CIC had overseas office. They picked Toronto for the North America presence. So that was sort of my 20 years in the capital markets. 10 years on Wall Street, working on global capital and the China opportunities, and then last 10 years I was with CIC. That was more like China capital and global investments, right? And I moved back last year back to the capital markets. It seems life has its own way of circling around, and it rhymes in different time.
No,
Kind of interesting.
That's certainly true.
Yeah,
definitely. And so with over this 10 years of experience, I do want to sort of maybe take a step back and start with the why. So, you have a great deal of experience with the sovereign wealth fund world and your time at the CIC. Why is this group of investors increasingly important for the capital market players?
Yeah. To put this into context, right? Here's a quick question. Who holds the power in the financial markets? To many people, the answer probably would be the large investment banks, the big asset managers and the hedge funds, because they are often in the media's spotlight, right? But this new group of sovereign funds, I would say, because this concept includes the sovereign wealth funds, includes the public pension funds, as well as the investment arms of many central banks. And this group of investors have huge amount of capital. It is estimated that they have $30 trillion actually, $30 trillion under management. So they have enormous power in the financial market. And to put this again into the context, right? They are actually the enablers of the players in the media every day. They are the LP investors in many of the hedge funds, and they are the deal making people which engage the investment banks, and certainly they are typically the mother of the funds for many asset managers. Just starting from their large size of capital, they are super important to this capital markets. But they are still very little known, and that's why it is important for the capital markets to get to understand this group.
Interesting. And last time I saw you was actually in Austin in February, and we were at a sovereign wealth fund conference. Since then I pretty much just sat here in my apartment, and you've actually gone and written 2 books, and one of them is about this digital economy, The Hunt for Unicorns, how sovereign funds are reshaping investment in the digital economy. Can you tell me more what we can expect from this, and how that 30 trillion of investment capital plays into the digital economy?
Sure. The big background of this is, these sovereign funds used to be very passive and behind the scene, and in recent years they become much more active and direct in the capital markets. And they started with the traditional asset classes like infrastructures or real estate or the general PE industries. And in more recent years, they made this leap forward into the venture investing, which used to be viewed as drastically different from institutional investing, right? Because venture investing is very specialized, and it tends to be very early stage and small ticket size, and they take times, and they are high risk, high return, which is very different from the typical risk profile, right? That the institutional investors look for. So it's in this kind of context we come to see the sovereign funds become the new powerful venture capitalists, and they naturally bring change to the traditional play of venture investing and Silicon Valley. So the way to think about their difference is in the following ways. First, obviously the large size. They have trillions of dollars under management, just individually, right, for some largest players. So their average equity check is very large, very different from the typical VC investment. And secondly, they are much more long-term, fewer IPO of tech companies comparing to many years ago, right? And the third aspect is, they are called sovereign investors. So they inevitably they have this government connections. So in the middle of this geopolitical tensions around tech competition, inevitably they are caught up in the global tensions, which is also different from a typical VC fund.
Yeah. So actually, let's pick up on each of those points that you just mentioned. The first one being about the large ticket size. I'm based here in Abu Dhabi, and if you look at the SoftBank Vision Fund, right, $100 billion, 60 billion from 2 Middle Eastern investors. So can you elaborate a bit more on actually how the sovereign wealth funds access this venture capital, and maybe also specifically on how the Vision Fund has impacted this landscape?
Yeah, the Vision Fund is a great example of this big ticket size of the sovereign funds, because the overall theme of Vision Fund can be summarized by 2 words, right? Think big. I think that's sort of the motto from Masayoshi-san. Think big. So from the unicorn side, I think that means the startup must think big in terms of develop their business and become the leading company in their respective sector, right? I think that's what Masayoshi-san was preaching, and then correspondingly from the investment perspective, that means they are ready to write a very big check, right? So in a sense, they are not only the unicorn hunters, but they also can be viewed as unicorn feeders. Obviously Vision Fund fits in that bill, but a lot of other sovereign funds are also in that category, right? The best example of that probably is Ant Financial, the upcoming IPO of the fintech arm of Alibaba. Now, of course, they're looking for a 200 billion plus valuation for IPO. That's a large number. But even before this IPO, 2 years ago, when they had the private round of financing, they got to 150 billion valuation. To a large extent, thanks to many sovereign funds investing during that round, which includes the Singapore sovereign funds of Temasek and the GIC, and even some less known sovereign funds like the Malaysia's Khazanah, and also guys from the pension world, such as CPPIB, Canadian Pensions. And of course, before that 150 billion round, CIC and China's Social Security Fund, and other sovereign investment vehicles of China were already investors in Ant Financial years ago, right? So these big ticket investments from the sovereign investors definitely created these unprecedented valuation of unicorns. So that's the think big side, right? And the consequence is now we have too many of the unicorns. There's 2013 when the word unicorn was created. There were 38 unicorns across the world. And by 2020, actually by the data end of 2019, globally there are more than 400 unicorns. That means during the 7 years actually, we had 10-fold increase of the number of unicorns. And I would say this think big from sovereign funds actually is a major reason for that.
And don't you think that's almost self-perpetuating as well, right? Because these unicorns are often the market leaders and they're extremely well capitalized. So it's almost a self-fulfilling prophecy in that sort of sense. Like you give a startup, $500 million to build their business, they're going to crush the competition if they have similar teams and other resources.
I think the word similar is the key, Rachel, because in some way, unicorns are not hunted; they're manufactured. Once people see the formula of 1 or 2 unicorns, actually a lot of smart people begin to industrialize that manufacturing chain of unicorns, right? It's not only in Silicon Valley, but also in China. And it's not only China and the US, but also in other innovation hubs in the world, such as India, right? The typical ingredients of a unicorn is online service, based on online service on internet platforms, promoted by social media, right? And partnership with existing giants who have large user traffic. And of course, on top of that, as you mentioned, right, is taking the venture money and subsidize users to generate more traffic and attention, right? So this is a time of time to reflect. Actually, this global downturn, this pandemic, right, and this global tensions. All the headwinds, they are ravaging the herd. When you take a closer look at the herd, some are pretty troublesome, right? So some already took on too much fat, they cannot race. Some are built for show, not for the race. And some are even worse. They already got sick, from their own issues, like a WeWork, that kind of situation, right? So you need you have to kind of see a doctor. So this is a very interesting time to revisit this herd.
Yeah, I think that's a great point.
That means they have to be a kind of active investor even more quickly to take on the unicorns more directly and in a more involved way.
Yeah, I think that's a great point on the case studies, and actually I'd love to dive a bit deeper into WeWork later on, and how maybe excess capital sort of played into that equation. But one of the points you mentioned was this long-term investment piece. And we actually had Rustin, who I know that, you know, you're friends with as well, from the Tesco pension fund. And he was on yesterday talking about how countries can and should use their wealth to invest more domestically, and potentially, especially given you know, the current pandemic impacting local economies. How do you see that playing out, and what are your views on investing in the hometown and innovation?
Yes, yeah, that's a great point. You know, very relevant in the post-COVID, you know, global economic recovery. You know, the background of this is, you know, even before pandemic, a lot of the sovereign funds already have multiple objectives. You know, on one hand, they seek financial returns. At the same time, they also try to use their investments to help their domestic economic development. And actually, the Middle East guys you mentioned are probably the best examples. You know, certainly, you know, when they put 60 billion in Vision Fund, they're not only looking for financial investments, right, but also they want to transform their economies from fossil fuel based into more innovation based economy, right? And we're seeing more and more like this. You know, for example, in Africa, right, you see more sovereign funds being created to better manage their resource money and use them to finance their economic transformation, especially the digital transformation, right? So I think the way we put this into historical context, it can be like this. You know, during the last, you know, after the last financial crisis, 2008, lots of countries have used sovereign funds or mobilized sovereign funds to invest in infrastructure as a catalyst for economic recovery, right? And let's say 12 years later, 2020, you know, for the post-COVID recovery, it's quite natural that the countries would do similar things, but I think they will focus more on the digital ecosystem, digital economy ecosystem, and the digital infrastructure. You know, obviously the world is still lack of, you know, more toll roads and highways and utility grid, right? But at the same time, you know, to be competitive in the upcoming digital economy, the emerging markets, I would argue, have even more important need for more digital infrastructures, you know, data centers, fiber connectivities, and even just the basic internet connectivities, so that globally, you know, about 3 billion people who do not have the internet connectivities can be part of the digital economy ecosystem. You know, that can bring some growth catalyst to the world economy. So I can imagine, you know, just like, you know, during the last crisis, you know, the government funds have used sovereign capital to invest in infrastructure to promote growth. Now we may see more sovereign funds putting money into digital economy as the new growth engine post-COVID.
Yeah, no, that's a great point. And as you mentioned, we are seeing that in the Middle East particularly as well. And you know, you place a lot of emphasis on this word sovereign, and obviously they are representing, you know, 100% owned by sovereign nations. How do you see this tension? Because you spoke about China, US. You know, tech investment is also kind of at the forefront of the geopolitical battlefield as well. So could you maybe explain how that technology battle sort of plays into that geopolitical tension?
Yes. You know, the technology is the front line of everything these days, right? And it's no exception for the sovereign funds. But you know, to some extent, it's kind of just a coincidence of time. But it played out in the broader context. What I mean by this is, you know, the sovereign funds are obviously becoming active investors and direct investors in technology. So from the historical context, it's a natural extension, right? You know, they started as passive investor, and they become direct investors in the asset classes they're familiar with, like infrastructure and real estate. and gradually they extend into every sectors they're interested. So they become this new venture capitalist. So this is sort of the historical context. But the new, let's say the current attention is, we would just talk about the historical development, but the current attention is that technology is viewed as strategic assets of a country, right? Like the data, like advanced technology, these are viewed as strategic assets and even national security by all nations, right? So it's just interesting to see this collision, at a time that all the sovereign funds are becoming actively invested in the tech sector, and they recognize that tech investments can be a useful tool for their own economic development. On the other hand, right, the host countries, the countries that are receiving the capital investment, are become more alert or become more conscious of the value of technology, and they are increasing their regulations and scrutiny, right, of such foreign investments. I think that's sort of the context of this collision we're seeing today.
I guess, TikTok and the current sort of debates in the US is a great example of that data and the digital information, the battle there.
Exactly. TikTok probably the best example of this. Actually, it's not surprising to you. It's a main case for my upcoming book, right? The titled "The Hunt for Unicorn: How Sovereign Investments Change the Future of Digital Economy." So what I meant by that is TikTok represents a very important case study for all the stakeholders in this. Number one, actually, first of all, it's a very positive story because TikTok represents a growth story during pandemic, right? Because of the pandemic, actually, TikTok, during the first half of 2020 was the second most downloaded app in the world. And of course, what's the number one, right? It's Zoom. So after Zoom, TikTok was mostly downloaded. So it shows you that even with the pandemic, there are still growth areas, right? So there are still new opportunities coming up, which means this hunt for unicorn story will continue. So that's number one, very positive. The second aspect of this uniqueness of the TikTok case is that it may give us useful reference in terms of cross-border data management. Because except for the US company Apple, TikTok and its parent company ByteDance is the only company in the world that has large number of users in both US and China. They have Chinese users and US users in respective territory, each with more than 100 millions, which is unique, actually. So this is the first case of governments to work out a scheme that can handle a company that has data in different countries. Google does not have a presence in China, so Google does not have this issue. Facebook is not in China. Facebook doesn't have the issue. Alibaba is very big in China, but Alibaba is not very big in the US, right? But TikTok and ByteDance is unique in the sense that it has users in both countries, and no matter what kind of the term sheet come out, it will be a very useful reference to understand how governments gonna work out. And the third aspect of the TikTok case is there's real money on the line, right? Because if there's no solution, then right now the US is saying, you must sell TikTok to US companies because it's national security of the US, right? And China is saying we're gonna manage the sale of the algorithm because this is the national security of China, right? I tell you, right, as a former, deal lawyer, banker, investor, it's not very easy to please two governments at the same time, right? So if you don't have a good term sheet, if you don't have a solution, then TikTok must be shut down, and then the 50 billion valuation people put to TikTok will go just like that, So there's a real money on the line, in the context of the TikTok case.
Do you actually see that as a risk, that it could just be shut down if they can't come to a conclusion?
Yeah, because if you don't have a solution, how do you, who eventually holds the algorithm, and who will manage and control the user data, right? And to highlight the complexity, remind you that the algorithm has been trained by data from both sides. So in a sense, the China algorithm was trained by the US user data. So it's not very easy to come up with a rationale to develop this thing up. We may need King Solomon to give us some wisdom about this.
No, for sure. And I guess, as you say, it's a very interesting case study, because normally when you look at China and the US digital economy, it's quite bifurcated, right? So you have Uber, you have Didi, you have, Amazon, you have Alibaba, and I guess this is a true case that overlaps. Yeah. I also want to briefly touch on, because, you've been looking at this area for a while. You published China's Mobile Economy a few years ago, and that looked at sort of the world-changing digital transformation in China back then. Why was this an inflection point on the internet in China? And maybe also talk about how today's geopolitical tensions are playing into that.
Yeah, sure. The book China's Mobile Economy was written 2016, published in 2016. And that was sort of the fast growth time of China's mobile internet. That was certainly a huge inflection point for China's internet, because overnight people go mobile, right? So that's that's the beginning of this mobile only age. What I mean mobile only I mean for many Chinese people, their first time to be connected to the internet is the time they have a smartphone. They never had a PC. They never had a landline phone. But with the smartphone, all of a sudden they have a phone, and also they have the internet. And that's a very big thing, because in just a few years, China became this largest mobile internet population in the world, with more than 900 million people. That's almost like the combined population of the US and Europe, right? So that's a huge growth during just a few years. Now, the development of the internet industry of that time can be referred to as copied to China, C2C, copied to China, which means the first generation of Chinese tech companies had their start as copycat versions of Western size. So for example, Alibaba was viewed as the Chinese version of eBay at the very beginning. Alibaba, and then it added Alipay, so you say, that's eBay plus PayPal, right? Or Weibo, it was viewed as Chinese version of Twitter, and Tencent, maybe viewed as Chinese version of Facebook plus Messenger, right? That's the general perception during that time, right? Now, what's interesting is, after this period of growth, China's innovation ecosystem has entered into the second phase. This phase, China, in many areas, actually, China has become a trend setter instead of a trend follower in the mobile economy. So for example, TikTok is a very good example, right? It started this phenomenon of short video, and then Facebook is adding similar features to its empire, right? So this phase you can refer to China copy, 2cc, right? And of course, the short video is just for the teenagers, but the adult version of this is during the last couple of years, China was mostly doing the catch up relating to smartphones and the 4G network and the mobile internet economy. But with last few years of development, China has become a equally interesting innovation center, just like the Silicon Valley of the U.S. Right? So what do you see is the big data from the 900 million users become the base for AI and big data analytics. The large internet platforms in China become the infrastructure for next generation startups, and of course, during that process, millions of college students become entrepreneurs, college graduates, graduates. So I think, in summary, essentially what we're seeing is, during the 4G, the age of 4G and the smartphone, China had proved its catch up, and now as we enter into the age of 5G, China is becoming a equally important innovation centers, and in many areas, China is competing with the U.S. head to head. And to your question about geopolitical tension context, I think that's the link to the geopolitical tensions, because years ago it was a follower, now it is a competitor.
Yeah, that's a great point. Less likely to be threatened by someone if they're just following what you're doing. And actually, we have a number of audience questions that have come in, and they're all quite heavy, meaty questions. So I am going to go to them so that we have time. So
yes.
Ken, thank you as always for your question, Ken. He's asked, what do you think? So we had Kai-Fu Lee on giving his perspective that China and the Western market are developing bifurcated internet standards, and are there different approaches to, say, the development of AI? And maybe you could also talk about what you mentioned about how China's market size plays into that, and does that maybe give them an advantage in this area with 900 or over 1 billion users?
Yes. Specifically on AI, right? I think what's really makes China different is the government come up with a comprehensive policy and agenda to set for its development path. The trigger point was 2017. When Google's AI machine beat a Chinese player in the Go chess game, which proved that AI is way, let's say, smarter than human players, right? And that sort of triggered China's rush into AI. And of course, every country is talking about AI, but what's really unique about China is it comes from the central government as well as the private sectors. At the central government level, since we're talking about sovereign funds today, what's remarkable is it came up with a top level kind of vision that by 2030, in just like 12 years from that game, China will become the world's leading AI superpower, right? And then from there on, the different ministries come up with different kind of industry guidelines. So for example, the NDRC come up with rules relating to AI champions, setting up standards for different AI industries. For example, autonomous vehicles. Or the education ministry will come up with guidelines, setting up. I think the plan was to have more than 100 majors on AI at the different universities, so on and so forth, right? So what's really sets China apart is this government efforts, and the government vision and the government resources to be put into this effort. And of course, the size of the market, 900 million users, united by the same language, same culture, and the same mobile payment, means a lot of activities on internet platform every day, which left tremendous amount of data, very organized data on these internet platforms that can be used to train AI algorithm, right? So to some extent, the flexible policy, flexible regulation on data is also a helpful fact during the early years of AI.
Yeah, and we actually have another audience question, which is kind of, builds on these internet giants in China.
Mm-hmm.
Agska Alam said it would be great to get your thoughts on the future of Tencent and Alibaba, given that they've seemed to extend their reach, into asset management, media, logistics, and they've also taken stakes in other companies, and they're quite forward-looking themselves as venture capital investors. So how do you see these companies evolving?
So I think to answer this question, I would start by saying, if there's anything that's in agreement by U.S. and the China governments, it's in the regulation of the big tech. There's not too many things that China and the U.S. governments are agreeing these days, but it seems like they have pretty much a consensus on regulating the big tech, right? So actually, let's use Ant Financial for the first example, right? For Ant Financial, it's the financial arm of Alibaba, and of course, we all know, right? As we are all in the financial market, we all know the financial sector is always heavily regulated. And in the early years, as I mentioned earlier, right, China takes more flexible approach to regulation. So in the early years, Alibaba enjoys super growth, because there's very relaxed environment. But as we speak, in 2020, we start seeing more and more regulation and more and more regulation of this sector, and also more and more risk alert actually from the regulators. So for example, the China Central Bank starts to warn about the systemic risk of Ant Financial's lending platform, right? Because when they use internet data, they can do remote lending without the need of collateral. So this may be a risk to the financial system, according to the central bank, right? And of course, the central bank plus the Ministry of Commerce, they are looking at the antitrust issue of Ant Financial and the related internet system. And most recently, very funny, during the IPO, right? The China's securities regulators actually took on Ant because Ant used the mutual funds on their own platform to sell their IPO shares, which triggered China SEC's intense review. So you can see, these regulations are going up, and of course in the U.S. you also see antitrust pressure on these internet giants going up. But also you have this geopolitical tension related big tech regulation, right? Because Ant Financial actually, according to media reports last couple of days, is being watched by U.S. As a potential target for crackdown in the U.S. So I think probably the most pragmatic or practical way to think about the prospect of guys like Alibaba, Ant Financial, and Tencent is to have a realistic prediction of their future growth. They will still have growth because the momentum is just tremendous. But the regulators are taking on actions. So we should have more, let's say, realistic projection for their future growth.
Yeah, no, that's a great point. And we've actually had a couple of questions coming in. I know we haven't even touched on this yet, and it is quite a big topic, but on the China's One Belt, One Road initiative, how do you think, what's the long-term perspective by the sovereign wealth funds sort of efforts to benefit societies such as China's investments for the One Belt, One Road, I guess, in addition to the physical infrastructure and the digital infrastructure. And we've also had a question saying, how important will sovereign wealth funds be in driving securitization of, the now almost 800 billion in One Belt, One Road loans?
Yeah, sorry, securitization of 800 million projects?
A billion of the loans associated with the One Belt, One Road.
Interesting. Yeah. No, honestly, I haven't really put too much thought about this securitization thing. Because in general, right? When you have a sovereign credit, you don't have to worry too much of that. But I think the potential solution of this credit issue along One Belt One Road projects actually may come from the sovereign wealth funds of those local countries. What I mean by that is the local sovereign wealth funds can be a great partner for China capital with respect to One Belt One Road projects in those countries, because when they are part of the game, they bring the local credit into the mix, and they may even sort of use this credit support to engage more institutional investors into the mix. More capital markets institutional investors into the mix. That may provide a better solution, to the credit issue. And I think that going forward, we may see more digital Belt Road. Actually, the term for that is digital Silk Road. This digital prong of One Belt One Road, which means down the road we may see more nimble investments. Of course, you will still have similar infrastructure projects. Let's say internet connectivity infrastructures, right? Or the smartphone network, or the satellite towers, so on and so forth. But there will be more investments, let's say, in the ecosystem. Let's say mobile payment, right? Let's say e-commerce platforms, so on and so forth. Which means they are not necessarily as capital intensive as the traditional Belt Road that people relate to. Right? Because most of the time people relate Belt Road into toll roads, highways, and state and utility grid type of infrastructures, right? But going forward in the digital economy, the digital economy ecosystem, the kind of like soft connectivity is just as important, and we may see like a more kind of private equity type of investment as compared to the traditional infrastructure investments.
Yeah, absolutely. Digital and physical infrastructure. We are over time, but I did want to just make sure I answered those audience questions, although we do still have some outstanding time. Sorry about that. But I know we've spoken, a bit today about geopolitical tension, and your upcoming book is actually called The Digital War. But I do always like to end on more of an optimistic note. So maybe you could
yeah, exactly.
talk a bit more about what we can hope for, even though the title of your book is The Digital War.
Even though my other book is titled The Digital War: How China's Tech Power Shapes the Future of AI, Blockchain, and the Cyberspace. I certainly think that the interconnectivity of the countries, not only in the digital side space, but also in the kind of real economy, will still keep us working together and find the synergies. And again, if we look at the IPO of Ant Financial as an example, certainly they have existing investors from all over the world. And for the IPO, guess who the underwriters? They are the Wall Street investment banks, right? And for lots of the distribution, I can bet you that a lot will go to U.S. institutional investors, even though they will be listed in Hong Kong and Shanghai, right? Not NASDAQ. Partly because of the tension, but you can still see different levels of connectivities between the two countries. So I'm still positive.
Well, Winston, people are always keen to collaborate when there's commercial upside.
Exactly. Money matters.
Yeah, quite right. Well, we are actually not out of time. We are slightly over time, but I just wanted to thank you so much. It's been a pleasure as always, and really appreciate you giving up your time to speak to us all today.
Yes. Thank you very much, Rachel. Thanks for having me on the Salt Talk.